So guys, we all know that a recession is coming probably in 2023. So let's talk about all the different various strategies you can use to invest during a recession. I mean, we're going to cover the good, the bad. I'll give you my opinion on all of it. But there are 4 huge, gigantic things that you need to understand, or else you're honestly going to be behind coming into 2023. And this is not the time you want to be behind, guys. You got to get ahead of this curve. So I just ask in exchange for you to gently tap that like button and go ahead and make sure you're subscribed too. Thank you very much for those of you guys that are subscribed. But the statistics if I can talk, they say that 35% of you guys that watch me almost every video don't actually have that, subscribe button hit and those notifications turned on. So make sure you got those on, or else YouTube's probably gonna not show you all my videos. And if you don't have your strategy locked down for 2023 right now, it's all right, no worries. I actually have a sale going on for my private group where we have courses to help you through all that. We're actually doing a mini course here next week, kind of in between Christmas and New Year's, to kind of help you get started with that planning and that process of strategizing out your next year, because planning is the biggest way that you get there, guys. So make sure you take advantage of that holiday sale. It's the pinned comment down there if you guys are interested in that. Obviously, you don't need it. You can just watch the videos. You can get it everywhere else. But if you kind of want a group to kind of come together and kind of help you out with it and kind of help you through the entire process, that's what we're here to do. And so, check out the link down there if you're interested. So the first strategy you can implement, and that I'm hearing everywhere and have been all over YouTube all year long, and that would be timing the market. Now, if you're new to this channel, you may not know this, but if you've been following me for any length of time, honestly, nobody can time the market. Nobody can. Warren Buffett says you can. Peter Lynch says you can. Really, every investor that's ever existed says you can't, but apparently there's a lot of YouTubers that think that they can. And obviously there's a lot of TV personalities that think they can do the same exact thing. And I'm sorry, timing the market does not mean I make 47 predictions and then one of them turns out to be right. So therefore, see, I can time the market because I made 47 different predictions.
Basically I said the stock was going to be at 100. Then I said it was going to be 80. Then I said it was going to be 60. Then I said it was going to be 120. Then it's going to be 145, then 175, then 135, then 125, then 95, then 96, 97, 98, 99, whatever. And therefore it hit one of those to see I'm right. I knew exactly how to time the market.
Hey, some people out there have done a great job. Sometimes, some people are going to get lucky. Some people aren't. Whatever the case is, that's great. I just know that statistically, over the long run, nobody can do that with any sort of regularity, or else they'd honestly be a billionaire or trillionaire investor. And since all the big investors that I know of didn't do it that way, that would tell me that that strategy probably is not the one that I would go with personally. So the next strategy you hear about a lot is investing in safe assets, like gold or Bitcoin or wait a second. All of those have really sucked this year. And honestly, when you look back through history, gold hasn't been a hedge of a whole heck of a lot. And obviously we hadn't known because we haven't really had a bear market since Bitcoin kind of came into existence. Clearly, it wasn't a hedge either. It wasn't a hedge against inflation or the government or money printing or anything else like that. It honestly ended up being just like everything else. It cratered like all the rest. The reality is during any downturn, any down cycle, any part of that, everything gets hit. Everything. Yes, there are things that boom. Of course, oil stocks are the ones that are booming this year, but let's wait and see what they do next year as we kind of hit that recession time frame and, kind of see what happens from there. Remember, you can't just take a small segment of time and then kind of apply it across a much larger, broader segment of time and say, this is what's going to happen. The reality is through every downturn, through everything else, of course, there's something that happens to outperform, but there isn't a consistent place for everybody to go to whenever these times happen where you won't lose any money. Because if there was, everybody would run to it, right? I mean, why wouldn't everybody do that if there was something we consistently can point to and say, hey, this is the place to stash your money whenever it all goes crazy in the market? So I'm not saying it's a bad strategy or the worst strategy ever or anything else like that, but it's definitely not one that does what all the hype says it's going to do and what all the hype is about. Whenever you see somebody that says, hey, everything's going to zero, the governments are all going to fail, but hey, I got this gold investment over here that I'm pitching. Hey, sign up for my little gold thing and I'll send gold bars to your door, or whatever the heck it is. I don't know. Some of these commercials get kind of silly. You can see them on the ads sometimes on YouTube and such. But anyways, guys, you might want to look a little bit further as to what the actual performance is during times like these before you actually jump on something like that. And then, of course, we have the famous sector rotation, right? I mean, that's the staple on CNBC as to what you should be doing all the time when you're investing. I mean, basically, times like right now, you should be running to oil because look at how much oil's returned this year. It's done great and all the oil stocks have returned great this year. So definitely jump on that train, which to me sounds an awful lot alike, buy high. And then obviously you're going to end up selling low whenever that thing craters, right? I mean, I weren't telling you guys to buy that last year whenever oil was dirt cheap, or 2 or 3 years ago whenever it was really in the toilet. That wasn't when they were telling you to jump into oil. They're telling you to do it right now while it's riding high, while everything else is riding low, which to me sounds very much like the definition of, basically buy high, sell low. Now, there is something to say for actual sector rotations and money kind of rotating from one sector to the other. I agree with that. And that's absolutely how big funds kind of do a lot of those sort of things, especially hedge funds kind of move their money that way. But what you need to keep in mind, guys, is those folks are trading and they're trading in and out of these sectors all the time for various different reasons. So it's a lot harder than what it seems, one. And two, if you're not a trader, then what's the point in doing that? Then I've got to pay capital gains on something that I've owned for 5 years because now I'm supposed to run to this sector and keep it there for a little bit and then, sell that and then take those, whatever tax hit that is, and then move over here to this and then take that tax hit. That's not really how I choose to invest as a long-term buy and hold investor. So for me, sector rotation may work for a trader, but it doesn't work for a long-term buy and hold investor like me. And that leads me directly into the 4 things that you need to be doing ASAP. I mean, guys, if you're not doing these and you don't at least have these done at a minimum, you can't even start to build your plan and your investing kind of, overall plan and strategy for next year. So let's start here with these, and then you can basically build on that from there. And the first one is you need to decide, are you a trader or are you a long-term investor? You have to figure that out before you can even move forward with a strategy, because those two strategies are basically diametrically opposed. They're on the opposite ends of the spectrum there, and they require a complete, and I know I totally said that word wrong, guys. I'm sorry. But anyways, the point is they're on opposite ends of the spectrum, and you can't use the same strategy over here for trading that you use over here for long-term buy and hold investing. Now, you can have the same stocks, but you can't use the same strategy to implement this strategy that you can to implement this strategy over here. You'll end up screwing up one, or what usually happens is you end up screwing up both of them and you end up losing big in the end. So you got to decide, are you a long-term investor or are you a trader? And the second thing you need to do ASAP is you need to understand that a recession and a crash is the best time to be investing. It's not when we're at all-time highs like we were last year. It is right now during times like this and coming into next year. Those are the absolute best time to invest. I don't care. Go look at any chart and then pick a stock that you absolutely love. I use Apple, for example, because it's the one I love. And a $3,000 investment into Apple, not timing the bottom. I mean, I was 40% off from the bottom after the tech bubble. I mean, that's how bad I missed the bottom, guys. I missed it by 40%. Just a $3,000 investment then is worth 7 figures today in regards to Apple stock. That's it. So these times, that only happened during that time. It didn't happen afterwards, didn't happen before. And again, you didn't even have to be near the bottom to hit that. So it's not like I had to time the bottom of that recession and that crash perfectly in order to get that sort of return. You just don't. You just need to be investing. You can do the same thing during the financial crisis. Look at all kinds of stocks during that time because they all fell, and go, gosh, who doesn't look like a genius buying those stocks at that time? As long as you avoided GE, which I didn't, I bought a big chunk of GE and I shouldn't have. As long as you avoided that stock, every other stock has returned amazingly over the time frame. Even despite this drop, you can still go back and pull, Amazon, Apple, whoever, Microsoft, take your pick from that time and see how much you would have gained if you would have invested back then during that time, instead of being afraid and waiting for confirmation that we're out of the recession or the stock market's better or whatever, which honestly didn't even happen until like 2011, 2012, something like that. So, basically it was 3 years worth of gains you missed out on. And of course, the biggest gains by waiting for all that sort of stuff. Times like right now are the best times to invest. It's the best time for you to be in the market. And third, buy quality and please don't speculate. Quality stocks are on sale right now, today. Come on, Google, take your pick. Google, Tesla, Meta. Even if you don't like Meta, it's still a good company. There are tons of profitable companies with great balance sheets that are at all-time lows from valuation standpoint. Not all-time lows in terms of price, but in terms of valuation. They've never traded cheaper, but yet they're there right now. And it's not the end of it, guys. There's going to be more that happen. And we haven't even had the big Dow stocks and those old man type stocks. They still haven't fallen yet. So guess what? Those are going to go on sale too at some point in time. And you're going to be able to pick up great names at bargain prices if you're patient and if you're ready for those when they fall. But right now is not the time to speculate, guys. It just isn't. You have some great companies on great discounts that you may not ever see again in terms of a valuation standpoint. You may see that price, a great price again, but you may not see from a valuation standpoint them this cheap again. So you better be taking advantage of those companies. Again, during a hot market, I get it. A lot of times, the big names aren't going anywhere and it's the small names that are moving, and you can afford to speculate and kind of make some bets and such on some of those smaller companies and make some decent money. But in a market like this, you are getting incredible stocks at incredible discounts that are going to perform over the long run because they're great businesses. They have great balance sheets, great management teams. There's no need to speculate to get a great return, maybe not this year. And obviously, if you made a lot of mistakes last year buying at all-time highs, that's actually skewing your data even worse. But if you bought Google right now, at around 90 bucks or so, you can't tell me that's not a once-in-a-lifetime opportunity to own a great company that's going to do nothing but grow over the next 5 years. You're going to be sitting on a very nice return with very, very little risk, as opposed to, as we've already seen, some of these small cap companies and some of these hype EV companies and some of the other ones, they're going to struggle to survive, much less return wonderfully for you in the next 5 years. I'm sorry, that euphoric run that happened a year or two ago is probably not going to be replicated for a long time. However, a stock like Google is going to be around in 5 years, and it's going to be an even better company in 5 years most likely, and therefore, because it's beaten down so much from a valuation standpoint, even if we just get back up to fair value, you are standing on an incredible return on an incredible company. Just don't speculate, just buy those great companies because they are on a discount right now. And guess what, guys? There's going to be more companies that come on a discount as we kind of work through this mess. And fourth, and I'm being 100% honest here, guys, you have to avoid the noise. And I'm sorry, that includes right here on YouTube too. It includes the news media. I don't care if it's CNN, Fox News, whatever the heck you watch. All that sort of stuff is noise meant to distract you from what's actually going on with these companies and what you should actually be doing in terms of your investing. And unfortunately, some of my YouTube brethren have gone from long-term buy and hold investors to now they're traders. And there's nothing wrong with that, guys. I'm not knocking them. I'm not saying it's wrong. I'm not saying they shouldn't do that or anything else. But the point is, if you're a long-term buy and hold investor, what they are trying to do is a completely different strategy. And if you're trying to mix the two, it's very, very hard to do. And honestly, you're going to make mistakes in most cases. So you got to kind of understand, if somebody's saying something from a trading standpoint, it doesn't mean the same exact thing from a long-term investing standpoint. There's a lot of times they see trouble and therefore they're getting out of positions. And I see opportunity on the opposite end because I see something I can grab at a discount to hold long-term. They're two different strategies with two different goals and two different mindsets and two different ways of going about implementing those strategies. So you got to just ignore that noise, guys, and focus on your plan, your strategy, and implementing it and paying attention and listening to all the earnings calls, not the reaction videos to earnings calls, listening to the actual earnings calls, and then also going through all the financials, all the data, and really seeing what's being said and what's going on with the individual companies that you own. That's exactly how a long-term buy and hold investor does it. And if you're afraid to buy the dip because you don't know how to do a valuation or how to create a plan or how to keep your emotions in check, and you want 5 free courses and direct access to me to help and a ton of other resources, make sure you don't miss the Mega Deca Super Sale that's going on right now for the Market Insiders private group that is expiring next weekend. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.